or if there's any consolidation, what is it that you'd go out and buy? Would you buy banks? Would you buy consumption? Would you buy pharma? I mean, it's an open playing field for you, right?
So if you recollect, we have raised cash right from July, August in a big manner. And we were sitting on the beginning of October, also very substantial cash across all the schemes and particularly mid and small. In this recent fall, we are actually buyer in the market. Okay, we have deployed another 4-5% in the market. And if the fall is anything for whatever reason is meaningful, we will be aggressive buyer at these levels. That's the point number one. Point number two, what we're going to buy. Let's understand that. Okay. So if something has changed, okay, in India, it means the easy phase is over, which means I will still not going to venture out in the high beta names. I will still like to buy a mega caps company from the timing and then see how it changes. So again, same thesis. Let's remain slightly more defensive approach in our portfolio, low beta names, highly liquid names, large cap or mega caps name. So our portfolio strategy revolves around these things because ultimately as a mutual fund, what is our responsibility? Responsibility or mandate is to give superior risk adjusted returns. When we seeing the risk basket or risk parameters are changing, and hence your approach towards money management or the way of your portfolio construction should also change. So time being, a defensive approach, a conservative approach, that's our thing. Look at last 4 years, we were very aggressive. See, when you is a risk on, in risk on period, which you can generate extra alpha, which helps you in a difficult time. In risk off period, the whole objective is just to protect the capital. That's a time you don't have to venturing out and be very aggressive. That can be challenging or maybe suicidal sometime when you see a risk off period and then you try to cover up your underperformance and you try to play in the front foot. That will not work. So based on whatever adaptive asset allocation thesis we look at, given the prevailing global macro, we would like to play safe. We don't want to showcase any aggression. Even this market corrects and then recovers, our thesis has not changed as of now, unless it becomes a completely risk-on environment, which is, I'm not ruling out. We are expecting that maybe post US election, I expect risk-on rally. The potential of risk-on rally can come back. Maybe the crude can spike, Bitcoin can spike. There are not many data points which you look at. Base metal cycle, which has seen some amount of correction, can they come back in the market in a big way? We'll see. Since we are slave of data, if it changes, we'll look into it. Based, if you ask me what is the data points is showcasing, there's a high probability because the bigger event which is playing out globally, the US election is a very big event. And post that event, we will evaluate how things look from the macro perspective.